Hey everyone, welcome to this month's market update. I want to give you a quick update on what's happening overall in the economy and then our macro level, not the economy, but just macro level housing. And then we'll get into more so local Orange County here, what's happening. Okay, so just a few days ago on the 27th, the Fed raised the interest rates by another 0.75%, 75 basis points. Quick clarification, we've mentioned this before, but it is worth mentioning again and again and again. This does not mean that they raised the mortgage rates by 75 basis points. This is just the interbank lending rate. But what has more of an impact on the mortgage loan rates is the inflation. Obviously, the Fed is trying to do whatever it can to curb inflation. And there's talks of when is it gonna peak. Some experts are saying by September or early fall in general is when we should start seeing the inflation numbers drop and have peaked by that point. So we'll see, but again, don't associate what the Fed did with mortgage rates because they're just different. Okay, so Q2 also, a few days ago, I think on the 28th, a day later, numbers came out that the economy shrank for the second quarter in a row. So what this means is most likely, they haven't said it yet, but most likely we are in a recession, which is scary for some people. But honestly, for just talking about housing, as you'll see from the two charts that we'll show here, housing does not really get that affected by recessions. The prices tend to continue going up, as you'll see on the first chart where all these gray shadow lines are. These are recessions, and you'll see that the housing has continued to appreciate with the exception of 2007 and 8, which was a housing-related or a mortgage-related crisis. But all other times, housing prices have appreciated through recessions. So if you are thinking of selling, recession doesn't automatically mean, oh, we're going to have a huge drop in prices. That's not historically what happens. Second chart, we've shown it many, many times before, but again, it's worth showing because it shows that, again, housing does not necessarily get negatively affected by a recession. On the contrary, house prices usually go up. So with that being said, let's dive in more locally here in Orange County. What's happening? Demand is down, and all these headlines, when you see headlines, demand is down 40% or 50%, and sure, that's true. These are the real numbers, and they were down earlier in the year. Demand was down earlier in the year, even when the house prices were shooting up, just because there weren't many houses on the market. But anyway, demand is down 40% versus last year. And but the chart I really want to show and focus on is and this is more macro, this is the US number of sales, where you'll see that it's dropped, but it still corresponds to previous levels of home sales, number of home sales in a year. We're going to correspond to previous years before 2020 and 2021, which were anomalies. So it is dropping, but it's stabilizing. It's not, it's going back to normal. So that's with regards to demand. Supply of homes still remains very low. Relatively, of course, it's gone up 59% versus last year, but last year we had almost no homes on the market. So if you're comparing, right now in Orange County, we have about 4,000 homes, give or take. If you compare to 2019, we're still well below that range where the homes were in 2019. And if you compare for the people that are comparing this to 2008 or 7, we are way below inventory levels at that time. So relatively, it is still a strong market and still a market where we don't have enough inventory. Side note, but also the demographics are very different between now and 2008. So millennials are at a time where home buying age, which is the average of a home buyer age, is 33. So we have a lot more millennials than 33-year-olds at the time when 2008 happened. So we're still going to see a lot of demand over the next few years just because of the demographics, the number of households in the US. It's gone up significantly versus that time. So the demand overall is much higher than it was. This is basically it. Now, in terms of prices, we're seeing some prices go down, some houses are getting multiple offers. So there's still not a clear consensus on what the prices are doing. But if it's anything that is going to go down, it's not going to be anything significant. It's not going to be a 20%, 30% reduction like some people are. Really, they're hoping for it. They haven't bought and they are just waiting and hoping for that huge price correction that's going to happen, more of a crash, not a correction, so that they can jump into the housing market. So the indicators are just not there to support anything like that. So to wrap up, if you are buying, it's great because you should buy sooner rather than later. The interest rates are going to continue going up, so you want to lock your rate lower. But there's more options and less competition, which was everything that buyers were complaining about for the past 2 years. So you have less competition, you have more options to choose from. You can actually go see a house and think about it for a day before you write an offer, which wasn't an option in the past 2 years. You can keep your contingencies. There's a lot more leverage for buyers. It's not a buyer's market, but there's a lot more leverage. We're going back to a normal market where reason prevails versus, the unlimited number of offers that sellers used to get. Now, if you're a seller, you want to, as you can see from the graph we showed earlier, the inventory levels are rising. What this means, this is just competition. So if you're thinking of selling this year, the sooner you do it, the better. Because the more this line goes up, the more houses you're competing with. So you want to sell quickly, but also more importantly, you want to price. Pricing is so important right now. If you're going to overprice and you're going to chase the market with price reductions after price reduction, you're really not doing anyone any good. Certainly not yourself. So price is very important. Aesthetics, the home has to just be looking gorgeous because buyers have options that they didn't have before, but they have options now. So you want your home to stand out. So if you have any further questions about the market or if we can help you out in any way, please don't hesitate to reach out to us.